There are 5 levels every trader must master to consistently make money from the markets. And if you even skip one of these levels, that's probably why you're still blowing all your accounts and staying unprofitable. I built this pyramid called the Trader's Pyramid, including all the levels. And if you don't climb these levels step by step, you're never going to make it. By the end of this video, you'll know exactly which step you're stuck on, what level you need to get to, and exactly how you can climb from your level to that level, and eventually the tippity top of the pyramid. Let's get straight into it. Let me pull up this beautiful pyramid for you guys. 5-level pyramid. All of these are probably topics you've heard about, but you've never actually dove deep into it. Starting from the bottom of the pyramid, we have foundation and basics. So this consists of understanding the way charts work, all the tools you need, what is a candlestick, how to identify trends, and so on. But here's the thing. A lot of you guys who trade don't really understand the basics of what a candlestick is and how it works. Every candlestick has 4 values. It has the open, high, low, and close. Right? A lot of you guys are still trying to master strategies without even understanding how these work, because the reality is you're not able to make any strategy work if you don't understand the basics about how to identify what is a candlestick, what are the components of a candlestick, and how do I use this to identify trends. In my strategy, personally, I incorporate trends all the time. It's the main way I trade my strategies, because I trade a trend following approach. But as long as you understand the basics of what a candlestick is, how it works, what it represents, and what a chart even is, you are good to go for the foundations. Because all the combination of candlesticks and trends is just price action. You might hear that terminology a lot, but once you understand price action, which is the combination of candles and trends and what they signify, you're good to go on the basics. All right, because every strategy you trade revolves around understanding price action. Let me get my pen out here, or brush out here, is around price action. All right, candlesticks, trends, all that stuff. You might even dabble a little bit into indicators, find out that they're actually not the holy grail after paying $500 for some indicator, and then realize that, oh, maybe patterns are the move. You might dive into some double top chart patterns. Please don't fall for that nonsense. Any mouse pad that shows a chart pattern that somehow is going to turn you profitable, or an ebook of just random pictures of chart patterns that supposedly work and make money, don't fall for any of those scams. Focus on learning about candlesticks and the basics and the rest of this pyramid that we're going to be breaking down in a second. Once you kind of bypass the foundations and build that foundational knowledge of what are the charts, what is the candlesticks, what are the different time frames, what are indicators, and what is a BS indicator, like a buy-sell indicator, and what is a useful indicator, like, for example, the 200 EMA, which is one that I use to help filter my bias to identify the trend, and you understand how to identify trends, you understand price action, you are pretty much good to go with this section. You're ready to move on to section number 2, which is psychology and emotional control. Once you dabble in with foundations, you start to make a little bit of money, and you think you're the shit, but then you get hit with the reality of the fact that you don't have any emotional control. You're making psychology mistakes, you're losing trades, and you keep making bad behavior that you know you don't want to do, but you can't do anything but do these bad habits, which is like revenge trading, over trading, getting greedy, FOMOing into trades when you're not supposed to, and breaking your rules if you even have any. A lot of you guys make psychology and emotional control too complicated. The main thing you guys need to do to fix this is build a set of rules that encompass your strategy, the criteria you need for you to enter, and the criteria you need to exit, along with maybe some rules for trade management. Once you have those main things down, I promise you guys, psychology will not be as much of an issue, because a lot of you are trading without a set of rules written out that you literally look at every few minutes in the market. If you build a set of rules, a journal, a page of step-by-step, every criteria you look for your entry, and look at that every few minutes during the market, there's no way you can FOMO or jump in a trade when you're not supposed to, because you have a set of rules that you know you're supposed to follow, because you know the strategy works, because this is your strategy. And if you have that visible somewhere near your screen, maybe on a sticky note, maybe on a second monitor, or on a piece of paper, have that visible next to you while you're trading, and just glance at it every few minutes, I promise you guys, you're not going to be jumping into trades when you're not supposed to, because looking back, you realize how stupid you are. Maybe you might make some mistakes initially whenever you build that kind of set of rules, have it to the side, you might could still make some bad behaviors, but over time, you'll realize like, I have these set of rules. I just need to follow this set of rules. There's no point in me taking trades if they don't align with this. All right. The best thing I can recommend is make it like a checklist where, all right, once you have this criteria met, you check it off like, oh, I need price above the VWAP, or I need price above the 200 EMA. Check that off. And then the next thing is I need price to trend in the direction of my bias. Once that's done, you check it off, and then you move on to the next step all the way till you get to your entry. All right. At that point, there's literally no making mistakes because you're following a set of rules. A good way I like to think about it is you're like the messenger of the set of rules that someone wrote down for you to give to the market, to your broker, or to your platform that you're trading on. All right, you're not in control of anything. All you're doing is sending over a set of instructions, a set of requests to your broker. You're just like the person completing the request. That's it. You're not the person in control of actually making the decision or not, or changing the decision or changing the request. That's not you. You're here to execute the request. All right. And emotional control, one thing I can help you guys out with that will significantly help you is setting a max number of trades per day. If you find yourself constantly over trading or event trading, one thing that'll help you guys out a lot is just setting a 1 trade per day max as a rule. 1 trade per day. Nothing else. This is going to force you to have the discipline to take 1 trade. Even if your strategy doesn't work that well with 1 trade, having that 1 trade max rule is going to give you the discipline that, all right, after a trade, I'm off the charts. No looking at the charts. No more just making any decisions. Power off your PC if you have to. Turn off your laptop if you have to. Lock yourself out of your prop firm account if you have to. Whatever you need to do, make it so you can't trade more than 1 trade a day. Sometimes this might help. Another variation of this is by setting a max number of losses if you don't like doing max trade, but I would recommend max number of trades because this forces you to realize that you really can't trade more than 1 trade in the day. So there's no point in even worrying about overthinking or overanalyzing or taking trades that you're not supposed to because you're limited to 1. So take trades that align with your strategy, and I'm done after that. Do this for 30 days, and I promise you guys, discipline is not even going to be difficult anymore, okay? Because discipline is a big component of psychology and emotional control. A lot of us just don't want to suffer with the pain of losing money, so we hold on to a losing position, but you have to realize that you holding on to a losing position is going to eventually cause you to lose more money. And the unfortunate reality of this is that there's this quote that I like to remember a lot of times, and it's the fact that people only change their behavior when the pain of staying the same is greater than the pain of actually changing their behavior. Once you start to see holding on to a losing position is making you lose more money than you're comfortable with, that's when you'll change your position and you'll actually exit. But until then, you're not going to exit. And then the unfortunate reality is psychology is not going to be fixed with one simple message that I tell you or one simple YouTube video that you watch. It's all just a matter of engaging in the right habits and the right behaviors and minimizing what you shouldn't be doing. Over time and over you putting hours on the charts and putting in experience, you'll start to realize the common misbehaviors you're having and how to avoid them. And you'll focus on doing the good behaviors because you'll also focus on not doing the bad behaviors. As a result, you'll only do the good behaviors. So don't beat yourself up if you're still having psychology mistakes. Just focus on learning what you shouldn't be doing. And as a result, do the inverse of that. I shouldn't be over trading. As a result, what's the inverse? Regularly trading, not over trading, basically trading a small amount, 1 trade a day. That's the kind of solution for that. I shouldn't be revenge trading. How do I fix that? Trading aligning with my strategy. And how do I get that down? Having a strategy that I can actually follow visible next to me that I can read so I know what strategy I need to trade and what I need to follow. All right. So everything you know you shouldn't be doing, think about the opposite of that. Next, moving on to risk management. This is probably going to be the next thing you guys are going to be dealing with, which is how do I even manage my risk? I keep entering trades and then I lose half my account or I'm already at my drawdown limit. What do? I don't know how to properly enter trades. So you guys need to understand based on your strategy, what's your risk style? Are you someone who's more risk tolerant or less risk tolerant? Is your strategy something that happens to go on losing streaks often or maybe not so often? All right. What's your kind of tolerance on risk? A general rule of thumb if you're trading on a personal account is to risk 1 to 2% of your account per trade. But a lot of you guys, if you're trading with your own capital, you're barely going to be making any money, because trading with your own live account, growing with 1 to 2% risk, like it's going to take a lot of time for you to double your account if you're taking that little of risk. That's why I always recommend prop firms. 100% gives you so much leverage, a lot more beneficial for especially beginner traders, even experienced traders as well, to have a lot of potential upside, but a lot more limited downside risk on your end, because you're basically trading with someone else's capital, and you have a very low initial investment on your end, but you also have the huge upside of getting big payouts on a lot of capital and a lot of leverage. All right. So it's like leverage, but your side is minimized. And even with all this leverage, you still have to know how to properly manage your trades and manage your risk. All right. So if you're trading whatever market you're trading, understand, where is my stop loss on this trade? Where is my take profit on this trade? How do I calculate how much I'm risking on this trade, dollar amount? Okay. Because every single trade you get into, you should know exactly how much you're going to lose, how much you're potentially going to make, and generally your exit strategy. How are you going to exit a position for a loss or for a win? All right. Every trade, you should have that down. If anyone asks, before you even get in your trade, you should know the answer of how I'm going to exit a trade that I'm potentially going to get into, because there's not enough time to make this like thought process and decision making while you're in the trade. There's too much stuff going on. It could be a little overwhelming, and you might want to change a decision based on what the market is telling you, because maybe after you got in, there's a new story being told on the charts, and you kind of want to change your plan, which is the worst thing to do. Changing your plan mid-trade, because it's hard to distinguish whether changing your plan mid-trade is due to your emotions or due to what the market is telling you. That's why you never want to change a plan after you get into the trade. You want to stick to what it was prior to that. And not even just prior to the trade, but prior to when the market even opened. That's why, like in the previous section, I always mention, have a plan written out of what you look for, your strategy every single day going into the market, and make that visible next to you somewhere so you can look back at throughout the day. So you're always constantly referring back to your original plan of what you wanted to trade for the day, the style or what strategy you wanted to trade for that day. So you don't get sidetracked by the extra nonsense that's happening all over the charts throughout the day, because a lot of it is nonsense. A lot of it is noise, and you guys will be fooled by it a lot of the time. And the only way you can stay consistent is by having a strict plan, a consistent setup that you rely on based on what you've written out, your plan. All right. When you rely on that, discipline is not going to be an issue for you. Psychology is not going to be an issue for you. And risk management will not be an issue for you, because in that plan, you will also mention your rules for setting your stop loss, your rules for setting your take profit, and your rules for your trade management. All right. All three criteria fall into risk management. And the way you can have those down as well is by having it written down in your plan. You guys are going to hear me say this a lot, especially in other videos, constantly mentioning that you must have a plan going to the market every single day. It surprises me that traders are trying to be profitable without actually having a written out sheet of paper or note on your computer or a sticky note saying exactly what they look for every day going to the market. Like, there's so much shit happening on your screen. What makes you think you're going to magically remember and follow your rules every single day? You're bound to fold and make a mistake eventually at some point. So follow your plan and have a plan written out. That'll solve majority of these two problems. Okay. And again, limit your trades to max one trade a day. That's going to significantly help you with risk management and emotional control if discipline is a problem for you. All right. Moving on to strategy and execution. This is now more kind of advanced topics where a lot of you guys probably think is not an issue, but it is an issue. But it's not an issue until you get past these 2 points. You shouldn't focus on strategy so much if you still make psychology mistakes, because even if with the best strategy in the world, if you still make psychology and emotional mistakes, there's no way you're going to be profitable. There's no way. I can literally give you the most profitable strategy, and if you still can't stay disciplined to it, and you take trades too late, you don't follow all the criteria, or you jump in too early, or you take more trades that don't align with the strategy, then you're cooked. That's all I can say. You're cooked. You're not going to be profitable, even with the best strategy. But the same can go for psychology, having psychology, but not having a profitable strategy. But the reality is a lot of traders suffer with this part first and then need to deal with this part. So how do you deal with the strategy part? The strategy part, after you tolerated risk management, you have your plan, you have your psychology down. The strategy part consists of building a profitable strategy through testing and trial and error. At this point, once you're on risk management, you've probably tried a few different approaches, a few different styles of trading, and you have some experience trading some approaches. Some styles you like more than others. Maybe you like more of a systematic style, or maybe you like a discretionary style. Maybe you like plain price action trading, or maybe you're the type of person who likes trading with a few indicators and helping you make decisions, and maybe dealing with a little bit of price action, right? There's so much variety in what style you could choose. There's not a single strategy that like magically works better than everything else. It's all about making an approach that's personalized to the way you think, the way you read the charts, and the way that makes sense to you. Because I can take two traders trading the same strategy, but you'll see them both having different trades and different results because they perceive the market in a different way. They understand the market in a different perception. Because there's so many things happening on the charts. It's like there's no way you're going to think the same thing as someone else. So focus on building a strategy personalized to you. And the way you're going to actually build this strategy is by first, like we mentioned previously, building a set of rules, a plan that you're going to follow, and then testing that plan. And the way you're going to test that plan is through backtesting. And some of you guys might ask, what is backtesting? Backtesting is just applying a set of rules on the past price action, on the past chart, the previous chart that's already happened, historical data, and seeing how does my strategy perform? How do these set of rules perform in the past? Is it profitable? Is it break even? Is it unprofitable? Does it go through significant drawdown periods? Does it not have a lot of volatility? Is it a very clean, profitable strategy? It answers all those questions. And a lot of people think backtesting is a waste of time, and they think, oh, I'll just find that out through forward testing, but they don't realize you have to spend months and months of trading and money if you're trading with live money to finally get to a realization whether a strategy is actually unprofitable or profitable. Because the reality is some strategies even go through losing periods of a month, weeks to even months of break-even periods or even losing periods. So you want to backtest to get a quick general understanding of, is my strategy actually profitable or is it unprofitable? Should I maybe tweak something, or should I continue trading it and move on to trading it live and seeing how it performs in the live market? All right. So again, build a set of rules, a plan for you to follow with your entries, your market context, your bias formation, your trade management, your stop loss, your take profit, and that's all you need. Once you have that all fully written out, go and backtest that using a platform like FX Replay that allows you to go back on the chart and view historical data for an extended period of time on almost any time frame. Backtest your strategy, applying those set of rules, gather like 50, 100, maybe even 200 trades. You want to gather many different market seasons so you can see the volatility in your portfolio and your progress. And then from there, once you see you have a profitable strategy, now you'll move on to actually trading it live. I would recommend forward testing it, usually about like a third of the length of the back testing you have. So if you have like 12 months of back testing, you want to try and forward test it at least like 2 or 3 months. That's the most recommended. Some people like to jump in early and take the risk and trade it live with money on the line. You can do that, but my recommendation, just if you want to play extremely safe with the most efficient way to turn profitable with the least money wasted, is forward test it for about a month or two before you decide to go live on it and actually trade it with a lot of money on the line. Still, funded accounts give you so much leverage that you could still trade it, the strategy, without having a lot of money on the line, because you're only paying for that initial cost of buying the funded account, and you have a lot of leverage with that as well. So you can go with that approach as well if you want. Just don't be mad at yourself and don't come to me because I'll tell you I told you so once you start blowing a bunch of accounts. All right. So that covers pretty much strategy and execution. Backtest, build a set of rules, move on to forward testing, and then from there, if it's profitable, trade it live. Once you're trading it live, you want to follow the exact same rules that you had in the plan that you broke down in your backtesting. Along with this, I forgot to mention that I just wanted to mention. Good thing I remembered. Journaling, so important. So important. Track your trades and constantly reflect on your analysis, because this should actually fall under psychology and emotional control. But if you guys are still watching this, good for you, because this is very valuable. And this is probably one of the things that made me profitable, a big factor in making me profitable. Journaling, actually going back and reflecting on your thought process, seeing where you went wrong, seeing what your mindset and what your thought process was before you got into a trade and after you got, or during and during the trade and after the trade. Because reality is, you're not going to remember your thought process for every single trade you got in for the past month. right? If someone told you to explain your thought process for every single trade off the bat without even remembering the trade or looking at a picture of it, you're not going to remember. And a lot of the times when you journal, you'll see common mistakes appear that you wouldn't see if you're not constantly seeing the thought process on all your trades. When you journal, you're putting those thoughts down onto like saving it onto like a document, so that now the thought isn't just like clouded in like the other thoughts you have in your mind, the billion thoughts you have. It's now written down, it's saved onto a document so they can refer back to it whenever you want, because the thought's not always going to be fresh in your mind as it is the moment you took the trade. So that's why it's so important to journal the moment you took the trade, because that's when you have the entire thought process of what you were thinking getting into the trade. What were you feeling? Were you following your rules? Did you have the urge to break your rules? And did you even break your rules? All right. And if you guys want a full guide on how to journal, you can go look in the description. I have my own Notion journal template that you guys can duplicate and make a copy of your own and fill in with your own trades, your own thought processes, and answer the questions that I've listed there that are going to help you break down your thought process and tackle your emotional problems. All right. Definitely journaling is going to be your best friend every single day. Notion especially. That's my favorite platform to journal on. So check that out. It's in the description. It's going to help you guys out with tracking your trades and getting over your emotions and perfecting your strategy as well. All right. Now, the final top level of the pyramid. This is going to be the final part that you guys are going to get to. Consistency, scaling, and reps. All right. Consistency, all that means is consistently applying the same things you were doing prior to this, like what is required to complete this level, complete this level, complete this level, which is the stuff that we mentioned, right? Consistently having the plan written out, consistently knowing where your stop is, how much you're risking per trade, where's your take profit, consistently making sure you're backtesting and you're following the rules that you've used in your backtesting, your profitable strategy. You're testing it, pretty much applying everything that we mentioned in this pyramid from from here all the way down. All right. That's what consistency covers. And from there, once you get that first payout or two from your funded account, or you're starting to make a little bit of profit on your account, you want to scale your position, because we're not trying to make $1,000 to $2,000 a month for the rest of our life. I mean, if you want to use it as supplemental income small like that, you can 100% do so. That's all up to you. But we all know we want to try to get rich off trading. And the reality is, let me make this clear, trading is a get rich slow. All right. It's not a get rich quick. You're not going to get rich overnight. You're not going to get rich over months, maybe not even years. It might take you 5 years till you see some crazy money, like multi 4-figure days going into your bank account. But the reality is that opportunity is there. That potential is there. Are you willing to stay patient to potentially get to that point? People that work a regular job are never going to see that type of money. So you have to realize you're getting into a field that you're trying to make more money than they are within 6 months or 3 months of even learning about what the word trading means. Like, bro, come on, bro. Be real with yourself about the timeline of things, of how you can progress. Don't try to get rich quick, because anything that comes easy is going to go easy, right? The quote, easy come, easy go. So don't try to rush the process, and focus on becoming the best profitable trader you can be by matching the behaviors of a profitable trader. Another quote that I like to go by is, don't focus on the process, don't focus on the results, focus on the process. Because when you focus on the process, the results will come. But when you focus on the results, that's going to mess up the entire process and the results inherently with that. So consistently apply all the tips that we mentioned in these bottom area of the pyramid below this. And from there, all that's left for you to do is to scale. Right? Once you kind of got that initial profitability, you're getting those payouts, small payouts, all that's left for you to do, especially with prop firms, it's really easy to scale. Buy more accounts. Buy more accounts, and when you build a bigger buffer on your accounts, go a little bit heavier size so you can scale and get a bigger payout. You might blow a few accounts in the process, but what you should be doing is going heavier, because the potential payout you can get is going to offset the cost of actually what you spent, the expenses of your evals, your challenges, and your activation fees. Especially when you're trading with prop firms, that's the exact mindset you need to have, not the mindset of being married to one account and trying to turn this 50K account into a 300K account, because the chances of that is very unlikely. All right. Just the way prop firms are structured and their rules, that's not really going to be too sustainable. Okay. And when I say reps over here, consistency, scaling, and reps, all I mean is making sure you're applying all these rules every single day and figuring out ways you can improve it. Kind of similar to consistency, but consistency is showing up every single day. Reps is putting in the effort to improve your strategy, make your risk management better, improve your psychology and emotional control, and making sure you're on top of that at all times. All right. Following your plan, journaling your trades, getting those small reps in, and tracking your performance, because that's going to allow you to be on top of your game at all times. The worst thing that can happen is you're consistently taking your trades, you're on a losing streak, but then you slack off because you're like, all right, I'm on a losing streak. Like, things aren't going too well. I might kind of hold off on things. I might not need to journal anymore. I might not try journaling because I'm so like overwhelmed and so like sad and frustrated. And then a winning trade comes, a 1 to 5 RR trade that you rarely see ends up appearing on the chart, and you miss it because you didn't put the reps in, you didn't journal, and you were FOMOing because you're like, I'm already on a losing streak. I don't want to take another trade because I'm close to blowing my account. I'm on my last dollar, so I'm not going to take this trade. And then you miss your winning trade and you're like, oh my God, I should have taken that trade. So frustrated. Your fault, bro. Put the reps in, stay consistent, and then follow the entire process of strategy, risk management, psychology, and emotional control, and the foundations. If you have all this down, I promise you guys, it's not going to be too difficult, right? It isn't easy, but it is simple. That's the process. That's what I wanted to say. The process is simple. This is what you need to follow, but it's not easy. All right. You have the structure laid out. All you need to do is let time do its thing, let experience play its game, and just put the reps in. Do what you know you're supposed to do. A lot of you guys know exactly what you need to do. You know what the work is supposed to be done, but you slack off because you're okay with the thought of being comfortable and staying where you're currently at, right? Like the quote I mentioned earlier, change only happens when the pain of staying the same is greater than the pain of change. And the only time you guys are going to make that change is when you're suffering more than in your current position than actually making the change that you need to be making. All right. So stay consistent, put those reps in, follow every concept that we just mentioned, and I promise you guys, you'll level up your trading in no time. If there's any specific thing you guys are struggling with, or maybe specifically on this pyramid, let me know down in the comments below. Maybe me or someone else can help you out, give you some guidance, and put you in the right direction. All right. I'll catch you guys in the next video. Peace.